TLT stock, and of course TMF stock, and even JNK stock. TLT stock, of course, is the ETF for the 20 and 30 year treasury bonds. I'm going short. I'm going short in a way that I'm looking at the economic data, and I think we've probably solidified that we're probably not going to see TLT stock moving back up above 100 anytime soon. I'm stepping in and I'm going to start selling some options, some calls, naked. But what I'm also looking at is I'm going to wait a couple weeks as I continue to sell those calls, eventually buying some puts. The economic data we got this week tells me that interest rates are not necessarily going to go lower as early as the market would like it to happen. Because of that, my thinking is that the bond yields have gotten ahead of themselves. U.S. 10-year Treasury, not part of TLT, of course, but the 10-year Treasury, I expect to probably maintain a pretty steady level at this point. Not much movement. We might head back up above 4% as the market gets accustomed to the fact that interest rates will remain higher for longer. And March, a rate cut looks out of the question if you ask me. Let's jump in. I want to show you some of the economic data as to why I think TLT stock stays about where it is, but definitely doesn't go higher. And my options, my call options that I will be selling, they expire worthless. Let's jump in. If you're just finding my channel for the first time, thanks so much for stopping by. Make sure to hit that like and follow button. Thanks for the comments down below. It helps the metrics on the channel. The channel is growing very rapidly. This is a breakaway channel from my original channel, of course, Cannabis Stocks Analysis, DH Taylor Analysis. You can find all my written content on these videos down there at the website. You can also find these bullet points as to what it is that I do on my website. I'm launching the top 100 value investment stocks. I'm going to have that up probably Tuesday morning. So make sure to stop by the website. Here we take a look at U.S. CPI core inflation came out this week along with employment numbers. And my thesis on what's going on with the economy, I've had this same thesis for a while now. We're not just going to hit 2% magically. That interest rates are going to need to remain higher for longer. The information we got on the core inflation today, this week, tells me that inflation isn't going lower as fast as the Federal Reserve is likely to want it to. It hit something like 3.93% today. They were expecting 3.8%. We're just not going to get to 2% magically. I believe this interest rate levels that the Federal Reserve have this at right now is neither too accommodative nor too restrictive. If they lowered interest rates, given the current economic environment, they would accelerate the economy, which means we wouldn't, or the Federal Reserve wouldn't get to 2% anytime soon. That's what they don't want. There's other variables, of course. As interest rates move lower, mortgage rates are moving lower. People are entering back into the housing market. Housing prices are moving back upward. All that big spike in inflation that you're looking at right here, 70% of that was housing. So again, if interest rates move lower, that will accelerate individuals getting into the housing market and push prices up further. I actually think that the Federal Reserve is probably going to get frustrated all through 2024 and have to raise interest rates even just a little bit, maybe a quarter, maybe a half. They went from nearly zero all the way up to what, 5.5, real fast. They got it right away? Probably not. They're going to have to adjust things until we get to that 2% level. In the meantime, non-farm payrolls came out first week of this month. Non-farm payrolls, as you can see, not exactly shedding. We're definitely not negative, but not exactly shedding a lot of jobs, that there's still job creation. Granted, yes, it's a lot lower than it was before, but the unemployment rate is at 3.7%, which is really low. Given that, again, if the Federal Reserve were to lower interest rates, That would accelerate the economy. We wouldn't hit 2%. Another thing that hit this week, we get it every Thursday, initial claims. Initial claims moving lower. Not exactly getting the unemployment that the Federal Reserve would need to keep price pressures lower, moving lower, and accelerate inflation moving lower to 2% faster. Continuing claims. This is another one. I watch these more religiously than I do non-farm payrolls. They kind of coincide with each other, but I like these a lot better because it's you don't get revisions like we always get revisions on non-farm payrolls. Given that, continuing claims. These look high. These are very low on historic levels. Given that, continuing claims, if it continues to move lower like it is, this will accelerate economic activity. The Federal Reserve will have to continue to keep interest rates higher. This is the one, this is sort of my granddaddy of them all, personal incomes. What's happening here? We're starting to see a little tick upward, but one data point is not an economy. It's a process. Given that, personal incomes, if we see a rate of growth in personal incomes moving higher or lower, you will see consumption moving higher or lower, whatever the case may be. It isn't a straight one-for-one correlation, but they're highly correlated. As more and more people get on the payrolls, earning income, the personal income growth rate increases. So does consumption. Because of that, we're seeing kind of like the bottom right here, and we're not seeing necessarily a drop low enough that's going to get unemployment low enough that we'll see the economy contract enough that the Federal Reserve will be able to lower interest rates. I'm not looking at this as a soft landing. I look at this more as a flyby. I don't think the interest rates are where they need to be. That gives me what I'm looking for, TLT stock. I wanted to wait. I was selling everything, doing what I was doing all through November and December. Took a break over the holidays, as I always do. Wanted to see the first 2 weeks of the year kind of move forward. I saw employment. I saw inflation. And at this point, I'm looking at the 98, 99, and 100 calls, say 2, 3, 4 weeks out. Looking for out of the money, short dated, medium term dated calls to sell naked. I want to pull in anywhere from 20 to 30 cents with as little delta, as low delta as I can possibly get, and theta. I don't want to buy a lot or sell into a lot of time. Given those two variables, if I can pull in a quarter, 25 cents for one contract, which is 100 shares, I trade in different sizes of that, of course, but if I can bring in 25 cents, I do that 4 times straight, that's 1%. I'll take that. Given that, moving forward, this is going to be my game plan that I think that TLT stock, we've seen the recent highs, and that's probably where it's going to be. We'll see a lot more sideways movements. I'm going to keep selling those calls. Should we start to see numbers, data points, employment numbers moving back upward, unemployment numbers moving downward, inflation moving, say, flatline to start popping back upwards, then I'll start buying puts underneath, a risk reversal, selling those calls, buying those puts, taking a directional position, creating a strategy with options. But I'll sell those calls for now to bring in that premium and get ready. I think that the high for TLT is in place for now. I think the economic data tells us the Federal Reserve doesn't have the ability to lower interest rates as fast as they would want to. If they did, they would start to accelerate this economy. We're nowhere near 2%. Bottom line. So I'll sell those calls, let them expire worthless, take that premium to the beach. Make sure to hit that like and follow button. And if you want, make sure to hit dhtaileranalysis.com. You can see what I do on the website there. We'll see you in the next video.